Hello. Happy Thursday. Happy mini Masterclass Thursday. We are coming to you a little bit early this week because we are coming to you live from the East Coast. So it is actually 6 o'clock here, and so we're just trying to accommodate for travel and scheduling. So thanks for coming and joining us early or coming back and watching the replay at some point in time, either on our YouTube channel or LinkedIn or here. We super appreciate everyone. Today, we are going to focus on holiday specific type write-offs and what you can and can't do around your parties and your gifting as far as compliance wise for the IRS and for your taxes. Of course, you can always elect to pay for things out of your own kindness of your own heart and your own wallet. If you would like to do something over and above what the guidelines are for write-offs compliance-wise, but you just can't write them off as a business expense. So, that being said, I'm going to go into things. I have notes over here prepared, so if I look off and on camera, that is why. So first and foremost, Christmas parties. This time of year, so many people, and every restaurant you go to, you see it, are having Christmas parties and staff events, and I love it. I used to love, oh you guys, I worked in auto for a while, and we used to have the best Christmas parties. I mean, I'm telling you, these were fun. I would wear gloves and fancy dresses, and they would give away so many cool things, and there was great food and dancing and all the things. I can't even imagine what those parties cost now that I kind of know the flip side of things, but they were so fun. And I don't know a lot of companies that are still out there doing these large kinds of parties, and there's actually restrictions around being too extravagant, so we will talk about that. But a lot of companies still do something. We are a fully remote company, so in order to get our team together, we would all have to fly to some place, and then we'd have to rent a venue and rent rooms, and then there would be the food and the entertainment. So it can get expensive, but as long as it's reasonably expensive for the business that you have, you're in good shape. So first and foremost, parties are deductible. Employee parties, so we'll get to a caveat of that in a little bit, are 100% deductible. So holiday parties, annual picnics, staff gatherings of any kind where it might be a retreat or it might be a quarterly meeting on site that people have to travel to, anything like that is 100% tax deductible. So yes. You want to make sure though that you actually categorize them in such a ways that it's easy to determine that that's what this was. So you could even do underneath employee benefits or something in your chart of accounts. You could even create a holiday party and gifting type account so that you're able to easily identify and pull out these expenses versus another type of meal or another type of an expense that was for your employees or other people that may not be as high of a deduction. So that's a suggestion to really separate these things out. Also, you want to retain all of your documentation around these events. So you want to retain the guest list. You want to retain receipt capture for all of the expenses, any bills that you may have gotten from vendors that were supplying for the event, any gifts that you purchased that you gave away. This is the part always that people don't love. If your employee wins a TV that is $800 in value, you are supposed to tax them on that TV. It is considered additional compensation. It can't just be a gift. If you have employees, you have to tax them on the amount of money that they won, either in cash, in gift cards, in prizes. If you're doing that type of thing for them, whatever the value of that thing is needs to go on their next payroll, and they need to be taxed on it. Alternatively, you would write a 1099 to someone if you gave away something to a vendor or a colleague or somebody else that wasn't on payroll with you. You would still want to 1099 them on the value of that thing. Just think about game shows like, I don't know, The Price is Right or something. When people win those big prizes, they also get a 1099 for the value, and they have to pay the taxes, the applicable taxes on that prize. So please keep that in mind. Every single year, I get the question, what can I do, or how can I give things to my employees without taxing them? And the bottom line is you really cannot if you're trying to be compliant. And you also can't write it off if you don't put it through payroll, which means you would just be taking it as a personal gift, not a business write-off, so it becomes actually taxable liability back to you, which again, as the owner, you can elect to do, but most of the time people are looking for a write-off. So there's that. You want to limit the guest list. So if you are looking to write off 100% your employee events, you need to limit it to employees. If this turns into like invite your vendors and invite your prospects and invite, past customers that you just really like, then it turns into a different type of function in which you may not be able to write off more than 50% of the expenses for. And so that's why you really want to document the guest list, because you can invite your employees and their spouses and or families, so children can come, but it's immediate family. It's not like the mom and the sister and the grandkid or whatever. It's just immediate family of your employees. You can write all of the expense for hosting them off, but once you start bringing in outside people like vendors and customers and other people, you're creating a situation where if you were asked to produce documentation, it may be deemed that this wasn't really an employee event, in which case it falls into a different category of meals and entertainment or whatever the case may be. So watch who you invite, make sure it's very documented. Keep it simple. So here is where the IRS could deem that a party was too extravagant, therefore not necessary, and not really meant then for the benefit of the employee, but more like, ancillary benefits like marketing power or, just rah-rah or whatever. So you want to make sure that you don't have to have like paper plates and plastic forks on a picnic bench, but you can't go way above and beyond. For example, one of the examples in the IRS code was an employer that rented out like a whole wing of a Ritz-Carlton for their employees, and that was deemed unnecessarily extravagant when they were audited, because that's great that you can do that, but it wasn't necessary to holding the party. And so they were they were reassessed on their taxes after the audit, and they did not get to write off that expense. And that was a very large hit that they took. So I think they probably thought, I'm going to spend all this money, probably because they didn't want to pay as much taxes as they were going to pay. So they thought, let's get rid of all this money. Let's have this big, huge party and pay for it all through the company, and then it'll lower our tax liability. Nice thought, but there is a caveat of it with extravagant purchases. So you do want to make sure that you keep it as simple as you think is nice at the same time, but not over the top. Document everything. Like I said earlier, I would even go so far, if you are going to have these types of events, to make sure there are specific categories that are on your financials that you can record, or your accounting professional can record these types of events under. That way you're being so clear that this was a company event, a company party, a staff gathering, that you don't have to worry about, if you're audited, having to pluck through everything else to prove it. In fact, you can also use what's called the projects module in QuickBooks Online and create an entire project that could represent, a staff gathering or multiple staff gatherings, where you could actually record all the expenses and tag everything to a specific event, similar to if you were doing job costing or project management or fundraising or grant tracking. You can use that same mentality with these larger events that you might throw, in order to be so specific about who, what, when, where, and why. Your expense list, obviously, that's part of tracking. Your receipts and any evidence of money that you spent. If you're paying cash for anything, you need to still document it. You need to still save a receipt or save even a handwritten little memo from somebody that said that you picked up balloons from them and you paid cash, whatever it is. You have to still document it even if it's cash, and maybe especially if it's cash because it doesn't come through a bank feed of any kind, so that if you're audited, there's explicit documentation of all the expenses if you're going to write them off. If you're not going to write them off and you're paying out of your personal pocket and you're not taking a deduction, that's a whole different scenario. But we're talking about if you intend to write these things off. The reason for hosting the party should be on all of the documentation. So it's not really enough to just say, here's everything I spent for the party. You are supposed to write, just like you're supposed to write for any meal or any entertainment related or travel related documentation, what the event was for. So you would say staff Christmas Xmas party, staff holiday gathering, staff, I don't know, rendezvous, whatever it is you want to call it. You want to write that on the actual receipts, not just put it in a pile and be like, oh yeah, all of this stuff was for the party. We're talking audit compliance when I say things like this, because if and when you're audited, if they can't deem that it was explicitly for this event that you're claiming it was for, they could disallow it. They could say, we don't have enough proof that this was really a legitimate expense for a gathering of any kind, or this particular gathering, so we deem it, we're disallowing it as an expense. They can do that. I've seen it happen, and it's always around meals, travel, and entertainment that it seems to be the case. So be very specific on your documentation. If you're working with us, or if you're working with another accounting professional and they're coding things for you in your books, that only helps them do their job better, faster, and less back and forth with you too. So that's also a good reason to do it. Employees, employee relatives, immediate family, business partners, clients, and vendors are all different types of gatherings that you can have and or write off in different ways. So that's why I said earlier, mixing all of those is not really what you want to do. You want to have a vendor event, a client event, an employee event if you're going to take the 100% write-off, because those other types of events you may only be able to write off, depending on the circumstance, up to 80%. So keep that in mind. I know it sounds like the best idea to kind of get everybody together at one time, but from a tax compliance standpoint, it may not be as advantageous financially for you. If you are getting catering, if you're renting a space to hold this, if you are buying gifts for people, if you are spending any kind of money, you want to make sure that you use every single tool that is available to capture that, which would be a receipt capture, which would be maybe a Google Drive or something that you can store these things in. You can attach all this receipt inside of QuickBooks Online organically, and just there you have it. You never have to look for it again. Independent contractors are not employees, and I don't know how many times I've heard in the past my employees, and they don't even have payroll. And I'm like, well, who are your employees if you don't have payroll? Well, our contractors that we pay, no, they're not your employees. And you really, really, really shouldn't get in the habit of calling anybody an employee that does not actually run through a payroll system for you, where taxes are withheld and you're reporting their wages through payroll. So please remember that. But independent contractors are not employees, so they should not be invited to these types of an event, simply because that changes the tax deduction that you can take for having them and the expenses that you spend for them. I have a question. I love this. The issue would be mixing the guest list. Exactly. Don't mix the guest list. A great way to sum that up. So just invite employees and their immediate family only, and then have a separate event that's for your vendors and clients and or clients. And it might even be great to have it as like a mixer where your clients can meet other vendors that they could use. And now you're bringing those people into their lives, and you're like their little hero all over again for a different reason. You could call it a network event. You could call it a mixer. You could call it a chamber. If you're with the chamber, this is very similar to how they do things, where they're inviting lots of different types of people in, but employees should be specifically for these types of events. Okay, bonuses. Let's go over to bonuses. So we talked about prizes, even gift cards, and I'm sorry to say, if it's a $25 gift card, you need to tax them on it after you give it to them. So you put it in their payroll as like almost like a cash advance type of thing, or it would be, for all intents and purposes, a cash advance, and then on their next paycheck, they get taxed on the $25. And everybody hates that rule, and everybody thinks that sounds so stupid to have to tax your employee on a gift, but it's just genuinely how you got to do it. Now, I have seen in audits twice. There's 2 audits that I'm in right now with customers, and on both of those audits, the employer paid employees outside of payroll for one reason or another. And in both audits, that was found. And in both audits, those were disallowed, and it had to be reassessed as payroll, which means now we have to pay back payroll taxes and interest and penalties for not having paid the taxes on the original compensation, because they should have never been paid outside of payroll. You can pay your employees outside of payroll all day long, but you just have to then tax them on it on the next payroll and make sure that it's documented. So that is going to be same with bonuses. If you want to give your employees $1,000, great. Put it on their payroll check as a $1,000 bonus and make sure they're taxed on it. Lots of people this time of year, us included, when we give bonuses out, I want my employee to get the flat amount. So I want them to see that they got $1,000 or they got $500 or they actually got $250. My customers are all doing the same thing right now. And in order to do that, that's called a net check instead of a gross check. Every single payroll company out there can do these for you. QuickBooks, Payroll, Paychex, Gusto, ADP. You give them the amount that you want your employee to actually receive, and they will figure out what the difference is between that and what the taxes are and everything else. So how it will look on a pay stub is you got, I'm going to throw out random numbers because I don't remember the math off the top of my head, but it will look like you got $1,312.72. But you've got in your bank account $1,000 straight across. That is how you as an employer can make sure that you're giving your employee a net amount that you want them to receive, instead of giving them $1,000 gross check where they only receive $723.22 or something like that. So that's how you can solve for that. But bonuses and gifts and gift cards and cash that you may give out have to be taxed through payroll. And it's just a really important thing to remember. So I want to encourage all of you to also look at what you may be able to do tax planning wise next year by hosting different events potentially in your home. And not everybody is set up to entertain, and I understand that. I'm just letting you know this is an option for you, and it is a tax planning strategy that is completely legal and legitimate. It's called the Augusta Rule, and you can look it up, you can Google it, you can ask your tax preparer about it, but you may be able to host some of these types of events at your own home and tax-free. So all the money that your company would pay you as a reimbursement for hosting these events could potentially be tax-free to you, at the same time a simultaneous business deduction for your business. So because it's this time of year, this is coming up in my mind, but it is a tax planning strategy I encourage you to look into with your tax preparer. If you haven't already had your tax planning appointment for this year, you got 2 weeks. And most tax preparers are probably getting to be ready to kind of go night-night take a nap for a minute, because as soon as January hits, it's going to be balls to the wall, as they say. So you may not be able to get in by the end of the year, but you still can do tax planning in early 2025 if you haven't already. And there's all kinds of information on our pages, on our YouTube, everything about tax planning. But check out the Augusta rule with your tax preparer for next year, and you might get even better tax savings from taking advantage of it. All right, I think that's what we have for now. So to recap, make sure you document everything, including the guest list, so that it's explicitly clear that you only invited employees and their immediate families. Make sure that you're writing on everything what the event was that you're paying for, especially if it's outside the course of your normal business, like this would be. Make sure it's not too extravagant, that you're being reasonable with what you're spending on the party itself. And make sure you're taxing all of your employees on any gifting that you do, whether it's a gift card, cash, an actual bonus through payroll obviously would already be taxed, but you can't just write them a check for $1,000 and say, oh, I won't tax you on it because it's Christmas. You have to tax them on their bonuses. So that's it for me. Next week, actually, we're doing another... No, we are not. We are going to do the 4th Thursday because it is December 26th instead of December 25th. So I am going to come to you on the last or 4th Thursday of the month. And next time we're going to be talking about something. I don't know if Lauren, if you're still watching and you can remind me, I just went blank. I started saying it and then it completely disappeared. But we'll be talking about something else cool and for your business, as we always do. And we super appreciate everyone joining us, whether it's live or at the replay, and asking your questions. If you have questions, always put them in the comments. Always, make sure you're even DMing us or reaching out to us, even if it's on our YouTube channel or our LinkedIn channel where these aren't really live, but they're still posted, because we do go back and answer them. And others learn from you when you ask a question and we answer them. So we encourage you to always do that. All right. I'm going to let you go. Thank you. Happy Thursday, and we will talk to you all soon. Bye. Okay, just finished mini masterclass. However, I forgot to talk about alcohol, and that is normally one of the top 3 questions I get this time of year, and I should have talked about it, so I'm going to bring it to you here. And if you haven't watched our mini masterclass, it was all about holiday write-offs, and this will apply for sure. Okay, so normally a business cannot deduct alcohol at all. So if you're taking a client out for a dinner, or if you're taking even an employee out for dinner, or a prospect or whatnot, you're going to want to separate alcohol from the food to make sure that you're not writing it off. You're going to call it owner's draw, distribution, whatever it is. Another best practice that you can just keep handy is tell whoever you're taking, I'll buy the food and you buy the drinks. You buy your own drinks. That way there's no mixing of that. There's no chance for that to be mishandled. And if you do pay for them, go ahead and pay with your personal debit card. Separate the drinks altogether on the tab and pay with your personal debit card so that you are not considering it a business write-off. If you're getting your event catered and the catering company is providing the alcohol as part of their package, that is also fine. That is also still a write-off, but you just want to make sure that you're not purchasing individual alcohol at any point in time. It's for the masses. Okay, that's basically what I forgot to say. So there you have it. Individual purchases of glasses of whatever with dinner, no. Purchasing of bottles of alcohol for consumption by anyone and everyone attending the invite-only party at no additional cost, yes.